Good morning, everyone. This is 10:01, and we'll just start on time. Welcome to our speaker session, Systematic Shifts in Artificial Intelligence and Machine Learning Use and the Rise of Alternative Data. Today, we're joined by a panel of experts that are well-versed in the industry. Speaking today, first is our moderator. She is Tiffany Welch, head of Refinitiv Canada, industry veteran with 25 years in entrepreneurship as well as various executive roles in data science. I'd like to also take the time to first thank our sponsor, Refinitiv, without whom this CFA programming wouldn't be possible. And thank you, Refinitiv, for your continued support. Now I'd like to take it off to Tiffany, who will get us started and introduce our fellow panelists.
Thank you very much, William. And thank you so much for having us today. We're really excited to be a part of this discussion around the shifts in AI and ML and the rise of alternative data. And I think we're going to have an exciting conversation today. I'm joined by two folks who will be part of our panel and a colleague as well who will kick us off with some insights. So I'd like to introduce Tim Harrington. Tim is a co-founder and CEO of Battlefin Group, Inc. Battlefin is an ecosystem focused on bringing alternative data to the world through Battlefin's Alternative Data Discovery Day events and Ensemble technology platforms. Tim has over 20 years experience in the financial services industry. He was the president and partner at Lions Path Capital, which is a hedge fund strategy incubator, where he allocated capital to 30 fundamental and systematic portfolio managers since the launch in 2009. We're also joined by Haley Cades. Haley worked as a genetic engineer designing iron oxidizing bacteria and a bioreactor system to produce sustainable biofuels. Before launching the TKS New York program, she was the lead data scientist at Berlan Team, now Decode M, a market research firm where she founded and built their data science practice and developed analytical tools with natural language processing for companies like Lyft, Airbnb, WeWork, Nike, and Illumina. Haley has a master's degree in chemical engineering from Columbia University. And then joining us as well is Natalie Samarco, who will shortly kick us off and share some insights from a recent Refinitiv survey on AI, ML, and the rise of the data scientist. And Natalie is the global head of sales readiness for Refinitiv Labs. This is the innovation arm of Refinitiv. Natalie facilitates partnership and new business opportunities for customers, as well as brings to life the Refinitiv Labs mission in the market. She has helped popularize the message of emerging and innovative technologies as a functional part of financial services and related industries by working extensively in the global markets, having lived for nearly a decade in Asia. Natalie's earned an MBA from the NYU Stern School of Business, focusing on finance, management, and digital marketing. She's also an MA degree holder in international relations from the Johns Hopkins University, Nanjing University School of Advanced International Studies, and a BA graduate in East Asian politics from Middlebury College. She is fluent in Mandarin Chinese. So we're very excited today to explore transformation of data science, the systemic shifts in AI and ML, and the rise of alternative and unstructured data. We will kick it off with some insights from Natalie, and then I will draw on some of the findings of the survey to engage our panelists to share their point of view in a Q&A. Please do feel free to add your questions to the chat, and we will leave some time at the end to come back to them. And without further ado then, I'd like to pass it over to Natalie.
Thanks, Tiffany. That was great. I loved hearing about all the people that are on this webinar. Especially excited to have Tim and Haley here. It's a pleasure, truly. First and foremost, I'm going to kick it off with describing a survey that Refinitiv had just completed this year. It was released a couple of weeks ago, so it's hot off the press. And it's our survey in AI and machine learning across financial services. What you see here on the screen is a breakdown of our respondents. We do this survey every year, and we go into the market across buy side, sell side. It's a mix of both. We go into each of these firms and talk to data scientists, we talk to quants, we talk to people working at the executive level across all regions in the world to get a really comprehensive view of what is happening with AI and machine learning in our industry, really. So let's go to the key findings. Let's go to exactly what we should gain here. The full report is much more than this, of course, but we want to share the key findings with you. If you're interested in the full report, it's available for free, and we love to share that. So just tell Suzanne or tell your CFA Institute contact. They can get in touch with us, and we'll be sending that out, which I think everyone will be excited about. I always get very excited to see what is the new and hot thing, what has changed since the last time we did this survey, which was just 18 months ago. And now we'll just jump right into it. So you see here, these are the 5 key findings that came off the back of the 2020 AI machine learning survey. And so we'll just hop over from left to right. In strategy, we're finding that firms are scaling their AI and machine learning capabilities across multiple business areas. What this means in practicality is that the use cases are expanding extensively for AI and machine learning within the firms that we surveyed. The numbers are about 66% for risk, 61% for trading, they say nearly 60% for investment. So the AI machine learning business use cases are expanding here. Then we go into talent. And this is probably the most interesting change from when we did the survey just 18 months ago. Data scientists are going from supportive, from working on projects to strategic role. And what we're finding here is that 64% of data science teams, they're supporting business units. They're making those decisions about what projects to work on, not merely working on projects off the back of decisions made from the top. So this means that data scientists themselves are becoming a much more powerful within companies today in financial services. And then moving on to the technological side of things, we at Refinitiv always landscape the market. We've done extensive work on what new and emerging technology is and where it is in the hype cycle. Where is cryptocurrency? Where is AI machine learning? Where is knowledge graph type technology? And it's clear AI and machine learning is here to stay, and it's so much more than hype. And of our respondents on this survey specifically, I was surprised to find that 75% are not just implementing AI machine learning, but 75% of the respondents in our customers were implementing deep learning. So that was something that was a big takeaway for us and a big takeaway for the industry, is that we're not merely dealing with, in the financial services industry, the citizen data scientists. These citizen data scientists are actually going much deeper, and they know a lot more from the technological side. Going into barriers, the barriers have been reduced immensely within our respondents from what we've seen in the 2020 survey as opposed to 18 months ago. And we're seeing that these barriers are fading, and that extracting data is actually going to be a central issue, a central challenge, and of central importance in the following 2 years. So we're seeing as AI and machine learning is more socialized, more practiced, more implemented in the market, that the barriers are lowering because more and more companies are also passionately creating products that can process that data and facilitate its use. And then last one, disruption. I don't need to tell anyone here on the call that COVID-19 has disrupted our way of working. Many of us are in work from home situation. And we've really experienced a transformation in the mechanism of work, as I call it. And so what we're seeing off the back of COVID-19 is that it's actually forced the firms that we interviewed to invest more in AI and machine learning. And 40% of our respondents said that was central to their strategy going forward, not accommodating, the status quo now to get back to the normality of what I call the old times, BC, before COVID, but utilizing AI and machine learning to transform the way that they and their teams work in a new work future. So with that, as I mentioned, the big report is available at refinitiv.com. If you ping us as well, we can send it along to you. Much more information is packed in there. More than happy to share it. But with that, I think, Tiffany, we will hand it off to you to move us right along. Thank you.
Thank you very much, Natalie. Some terrific insights there, and also really interesting to see what's changed since 2018. Some of it accelerated or instigated by the impact of COVID, and some of it quite possibly already in progress, despite the more recent circumstances. For those who've just joined, I would like to invite you to put questions into the chat if you have some, and we'll leave some time at the end to circle back and have Natalie and our panelists address those with you. But I'd like to kick it off now with our first question and look at not only the rise, but the transformation of data science within organizations. And our survey found that since 2018, there has been a 260% increase in the number of data science teams within organizations. The total number of increase of data scientists was closer to 30%, but what we are seeing is that data science is no longer relegated to the IT department, but is now embedded within each line of business within financial services organizations, and therefore an increase in the number of teams throughout the organization. And when we look at this type of transformation and growth and rise, I think an important consideration is, how does the non-data scientist get in the game? If a person is not a data scientist, how can they effectively work with data scientists? And where does the role of the data scientist end and the role, let's say, of a CFA start? So I'd like to pose that question first over to Haley, and then I'll ask Tim to weigh in as well.
Awesome, cool. Hello, everyone. I'm Haley. I don't have a background in financial as a financial analyst, so I'm kind of the wild card panelist here. But in terms of working with a data science team, I think one of the biggest things is actually just be curious about what they're doing and being curious about, okay, what can we actually do with both structured and unstructured data, and is there any way I can educate myself on even just some of the simple models that these data science teams are using, or even just the simple math behind what these data scientists are doing. I know for me, when I was building a data science team, and I was pretty much one of the only technical people in the company I was working for, what was really helpful was when people were, some people were taking courses, just free courses on edX or Udemy or anything like that, where you're just really educating yourself on, what can actually be done with data science, even, beyond kind of the financial sector. So just from a personal level, personal education, I think, is super important. But, with the rise of all these no-code tools, you could actually do a lot of things that that maybe only a data scientist could do just a few years ago. So one thing, even though it wasn't in finance, one thing we would do is I kind of turned into data architect and data engineer, and gathered a lot of alternative data, and then, found a lot of tools like Quid is one tool that you can use for text analysis and topic modeling, and you don't actually need to be a data scientist to use that. So figuring out with your data science team, what are the tools I can actually use to help you and support you, even if I don't necessarily know how to code. I might not know everything behind these models, but how can I actually work with them interactively and not necessarily just here's a project, go for it, have fun, give me the results, actually be really collaborative with the data science team.
Yeah, I guess I can follow up on that too. You know, Python and coding has really, gone mainstream. And, I can even think of myself, I was a history and economics major and was a fundamental analyst. And, this was 10 or 15 years ago. And that wasn't even part of it, a thought in my mind. I would say if I was in the same position of looking to be an analyst at a hedge fund or, another financial firm, it's almost having the knowledge of it, and whether it's taking an online Python course or understanding the mechanics of the data science aspect will make you a stronger candidate. I've seen recently in a couple of the large hedge funds we work with, they're actually requiring coding backgrounds and skill sets even for more analytical roles. So the more you can learn and engage now, I think the better position you're going to be to get those jobs on Wall Street, or analyst jobs, or even the tech firms now. It's almost becoming something that people should look into now relative to what we do on the alternative data side. There are ways of starting with more, I'd say, data sets that have user interfaces, or don't go out and think that you're going to get Yodlee and have this raw data stream and be able to turn it into whether Home Depot is going to beat earnings or not. But go out and find some interesting data sets that you can use, and don't go in too deep until you kind of have that knowledge, and if you're passionate about it, which that'll obviously be the direction you'll probably end up going.
Thank you very much, Tim. I think some of the themes there are, that there are tools that can be low code, no code, or other types of non-data scientist, maybe citizen data scientist tools that are available. But it is important to bring the context of what the data science can do together with what you're trying to accomplish, what insights, what problems you're looking to solve for, what hypotheses in the business and financial context. And one without the other will prevent the acceleration of getting that competitive edge. And speaking of which, a key input for data science is alternative data. And in our survey, we found that in 2018, that 30% of firms did not use alternative data. And now fast forward to today, that number's dropped down to 3%. So if we flip it on its head, 97% of firms use alternative data. And given that adoption, is alternative data still alternative, or is it more mainstream, and does that matter for what we're trying to do with it? So maybe I'll start with you, Tim, and ask if you feel that alt data is already mainstream. Do you see people using it effectively, or is there still a long way to go?
Yeah, I think it's really topical. I actually have a slide for that, so hopefully we can hold this up. I'm assuming there might be some people in the audience that aren't as familiar with alternative data. So just one quick overview. When we say alternative data, these are data that refers to data that's derived from external sources. So not coming from a company, not coming from a 10K, a 10Q, but almost external or auxiliary. And I think that why that's really important is that, think about COVID and what kind of happened with so many companies at the beginning started pulling back on giving guidance and earnings and different things. So it was a great way to have a way of testing what your belief is, your investment thesis. And there are, so many categories. Like we try to break it down into, 43 different categories where you can look at everything from clickstream data, weather data, shipping data. There's a massive amount of data out there. So first you want to kind of organize it and put it into, kind of these different categories. And I would say, like, as it relates to that question, there definitely are firms that do it well. It's become a little bit of a buzzword where even investors are like, what's your alternative data strategy? you have to come up with something quickly. But if you look at the ones that are truly differentiated, the Two Sigmas, the Citadels, the World Quants, they have dedicated sourcing teams that are scouring the globe to find the data set, then a process to bring it in and have the data engineers get it ready and capable of being analyzed before it's handed off to the next team and the data science team to kind of look for those alphas or those signals. So that is like kind of in the tier 1 league of their own, $50 to $100 million budget type of spend. And then you also see a differentiation. Those are the ones that have learned you really need to combine data sets to get a really strong signal. And then I feel like what we've seen is kind of the quants were very much the first group to lead the way. And then the fundamental discretionary world has been, catching up, I'd say, over the last 2 to 3 years. And one of the benefits there is that, if you're a fundamental analyst and you're looking to figure out what's going on in a quarter or having some type of channel check, like alternative data is a great resource. I'd say that, you can go on and, look for different data sets and say you're using alternative data. But if you're really committed to it, then there's a team, there's a process, there's, a whole commitment behind it. So 97% probably say they do it. I would say, whereas it used to be 10 or 15% that did it well, that number's gone up. It's, 25%, but it's still hard and it's expensive. And, I think that there's a long way to go before it's fully mainstream.
Thank you so much, Tim. And what are some of the challenges? Like you say, it's hard and it's costly. Is that in sourcing the data and getting quality data? Is it in knowing, what models to run the data through? Where's the secret sauce happen?
Yeah, I'd say sourcing has probably become less of a issue than it was 5 years ago, just because there's events or virtual events, there's data exchanges. We're partnered with Amazon and a couple of the others. So getting access has become easier. I'd say, one of the major things is always with alternative data is the structure, and, having unstructured data versus structured data, two completely different things. And then back to that, the tier 1 guys, they've developed, their own security masters, and they've developed ways to map the different data sets to tickers and companies and QSIPs and CDOLs. Like there's a lot of work that can go into it. I'd say the good thing is, like what you mentioned, the low code, no code aspect of things is developing a lot faster than I think I would have expected. So, that lead that those top funds have has definitely shrunk, and now it's kind of, it's anyone's game to try to find the alpha.
Thank you very much. Appreciate that. Haley, over to you. And just before I ask the question I had intended, maybe I can ask a follow-on on something that Tim said, just so our audience can understand, the significance between structured and unstructured data. Some may be familiar, some may not. So would you be able to just comment on the difference between those and why unstructured poses a challenge?
Yeah, so unstructured is definitely more of a challenge. I also find it a little more interesting. You can be more kind of creative with what you do with it, but structured, you kind of have a schema defined before you actually use this data. And it's a lot easier to work with. Non-data scientists can understand it a lot more easily. And unstructured, often that's stored in something like a data lake or S3 on AWS. So sometimes storage can be a little cheaper just because the schema is defined after, you collect that data, but you'll definitely need, data architects, data engineers to really make sense of it. So, maybe storage is cheaper, but actually dealing with it might be a little more expensive. But I'd say the vast majority of, at least in my experience, alt data is unstructured, especially if you're trying to kind of get a competitive edge and find different sources that maybe other firms aren't using. So, in short, you might need a team of data scientists or data engineers to deal with unstructured data, whereas you just as a business professional, maybe using no-code tools, you could deal with structured data fairly easily. But there are different costs associated with both.
Appreciate that. Thank you so much. And so if a company is just starting to incorporate alternative data into their data science practice, how should they think about structuring their team, and what types of skills should they be looking for?
Yeah, so this is interesting because I think, Natalie, you were mentioning this, their data scientists are now kind of making more business decisions and they're less in just purely support role and more in a decision-making strategic role. And so with that, I think it's important to look for at least data scientists who are leading a team, who actually kind of have the skill set, obviously the data science skill set, but then the skill set, like the business-minded skill set or the financial analyst-minded skill set, where they can kind of serve as a go-between between the people up top who, want these results, and then their team who may not, fully, may not fully care about what the business outcome is, and just are in it for, the science and the challenge of it. So having someone who has the kind of a go-between, I found, was super important, and who can kind of speak both languages, and has a background in both. And so, Tim was mentioning, it is, if you're going out and trying to get a job, it's super valuable to have both of those skills, the finance side and then the actual coding side. And then also with alternative data, like I was mentioning, having, some data engineers or data architects, which are, very, very similar job functions. That's going to be super important in terms of ETL, which is extracting, transforming, and loading data, cleaning data, and getting it ready either for, modeling or for no-code tools. So I'd say an engineer, and then a scientist who's pretty much strictly modeling, and then someone also who can really visualize the results. I've heard it called data journalist almost, or data visualization analyst, where they can kind of translate, the results of their analysis to the key stakeholders in a way that, either looks pretty or makes sense and isn't, just a bunch of numbers and stats. That actually, I think, is an undervalued role, at least in my experience, because otherwise, all the hard work the data team has done can't really necessarily be integrated into, business decisions.
Thank you very much. That is an interesting add at the end there. That you've got the data people, you've got those who can do the models, but if it can't be made sort of discernible and ready for interpretation in a timely fashion, and in a way that non-data scientists can interpret, then we haven't quite finished the journey. I'll throw one more thing out there. A prediction from the survey was the rise of a new role, ML Ops, so machine learning operations engineers. And the role of this individual going forward to try and operationalize data science within an organization. So sort of extrapolating from that, the idea of automating some of the data management functions, automating some of the modeling work, such that you've got less heavy lifting in that area by the data scientists, and applying it more to the context and the outcomes, and where are we trying to drive forward with the insights. And so really almost, and this was part of the earlier question, like a self-service or democratization of data science within organizations. So wondering, Haley, whether you would agree with that prediction looking forward. Do you think automation and democratization of is in our future?
Yeah, I mean, from my experience, that's where it's already headed. I mean, I think, not to bring it up again, but all the recent advances in no-code tools, that points in that direction for sure. I joke with my data science friends about how we just try to automate ourselves out of our jobs so we can do, more interesting projects, and we can automate out, the ETL tasks. And then if we're using similar models, or the same model for the same task over and over again. There's no reason it shouldn't be automated, and even generating, pretty insights and visualizations can be automated as well. So I think like even just from, a data scientist or machine learning developer's perspective, the goal is to automate a lot of tasks. So to me that makes complete sense, and will be a competitive advantage if you can also just free up your data science team to focus on more, novel alternative data sources, more novel models and insights, possibly work on making, your own proprietary index to quantify, the, consumer sentiment about a brand, like on social media, something like that, right? So focus on more creative projects and have, the machine learning operations guy just automate all the, at least in like a data scientist perspective, the more like menial tasks. So definitely.
Wonderful. Natalie, did you have something you wanted to add there? I'm not sure. I saw you come off mute.
No, I was going to say, for your other question, what Haley had mentioned about translating data science to people who can understand it. And that is the key here. And many of us on this call, we know not just one language, but we know two languages. And if you've ever had a family member that knows one language or another language, and you have to do a bit of translation, sometimes it gets difficult, myself included. When you translate from one language to another language, it can be hard, but the hardest translation I've ever had to do is English to English, trying to translate an idea for someone who's very technical into something that can be digestible and ingestible for the lay person. So that's something that we really need to keep in mind. And people on this call, you guys are off the charts with your knowledge, your expertise, at the top of the game with the CFA Institute and their backing. We're going to need you to help us, conceptualize this. So coming to events like these and hearing Tim talk, hearing Haley talk is a great step in that direction. I can't stress the importance of that enough.
Thank you so much for adding that. And it looks like we're getting some questions in the chat too. So look forward to coming back to those at the end. So thank you everybody for your contributions. Looking at where we are today and the reality of the new normal, as we're calling it, with respect to COVID, our survey found that a critical impact was how tried and tested models that use trusted data actually failed with the systemic economic shifts brought on by the virus. And in fact, our numbers show that 72% of firms' models were negatively impacted. 12% of respondents declared their models obsolete, and 15% are building new ones. The main problem cited was just the lack of agility and ability to quickly adapt to include new data sets in the models as the circumstances changed. And so a question for both Tim and Haley is, how can we use alternative data to enhance model accuracy in the future? And is there new alternative data coming out due to COVID-19? And the last component of this is alternative data especially useful during volatile times, like we've experienced with COVID, to elevate accuracy and precision? So just to recap, how can we use alternative data to help us in the future? And is this something that's particularly valuable in times of volatility? So maybe on this one, I'll start with you, Tim, and then we'll pass over to Haley.
Sure. Yeah, I think this has been a hard year for quants, especially. You have titans like Renaissance down 25%. You have Bridgewater really struggling. And when you think about it, in the case of machine learning, you're training your models off of historical data. So COVID was something so out of the ordinary that no one predicted it that I know of. That was kind of just shocking. Like, you couldn't look back and say, oh well, let's just model it to 2008 and what happened, or let's do it to this, or even the Spanish flu. it was just very hard, and I think people were reaching for that. And then you also saw the government response with these monetary policy and the amount of dollars and things that were pushed into the economy was just unheard of at that point. So, you know, that I think this was an amazing year for alternative data, because you did have to pivot quickly and figure out what this new normal was going to look like, and what patterns were developing. And, you know, geolocation in the past, I think, was one area that, you know, people thought of, but it was hard. You know, it was like, are you geofencing the right Starbucks? Are they walking into the Petco instead of the Starbucks? But yet, in this case, you could use geolocation data sets to say, okay, it's now, you know, April, May, people are starting to move around again. They are starting to go out. Like, that in itself is important. You know, even the Johns Hopkins dashboard, I mean, that was something I looked at every day. And that was just, you know, it was interesting to us to see the amount of healthcare data that was coming to market, and even on a free basis, and publicly available. Whereas in the past, it was, you know, you had to worry about HIPAA and a lot of the MNPI, like there were a lot of restrictions. So I think it was a really interesting time, and alt data became a necessity instead of you know, oh, it's nice to have and I can talk about it. But if you want to see how many people are walking in and out of stores, you know, are they charging more online? Or, you know, is Peloton taking off because everyone's working out at home? Like, those are things you could track with an app, an app company could track. So yeah, I think it's been a really interesting time for alternative data.
Thank you, Tim. Some excellent examples of pre-COVID, post-COVID, and how the same data can be meaningful in one context, whereas it really wasn't able to find those signals or provide that insight pre-COVID. So thank you for that. Haley, would you have some thoughts on that? Alternative data in times of volatility, specifically, you know, how things have shifted in response to COVID?
Yeah, and I agree with everything Tim said, especially the point of healthcare data actually being more open source and to a certain extent, and free for people to use. Yeah, Johns Hopkins, there's a bunch of APIs you can use to get that data for free, which is super, you know, super interesting, something you really couldn't get before this. You know, even using things like IoT data, and with, you know, the proliferation of 5G, you know, we get much lower latency times. You can get that data in real time, see what people are actually doing, you know, with their devices. Geolocation for sure, you know, traffic data, I think is super interesting, especially at the very beginning of the pandemic. You know, I'm, you know, in New York, and it was just kind of a ghost town here, right? And so so there's a lot of interesting things. I also think, you know, something I found interesting was just, you know, different companies and brands' responses to COVID, and also different, you know, social and like racial justice issues, and then what was like the consumer sentiment around their responses. So you can get a lot of info from social media and sentiment analysis as well, that, you know, might be interesting to inform, you know, some financial analysis, because we know, you know, millennials and Gen Z, who have a lot of spending power nowadays, they, you know, they really care about what brands are saying and doing on things like COVID, or, you know, Black Lives Matter and everything like that. So I also thought, even though everyone, you know, was hyping up social media and sentiment before COVID, I just thought, you know, that's a really telling way, like that's maybe one signal you could use for you know, predicting where the markets might be going, especially around a certain industry or brand. So that was just something I was personally observing, mainly because that's a lot of what I was doing at my last job. But yeah, I think it was kind of like, if you weren't using alt data before COVID, you definitely needed to be using it after. And that's, again, how you're going to get that competitive advantage. And even seeing firms like, yeah, Bridgewater, like Tim mentioned, kind of slip up there was really interesting to me, because, you know, they pride themselves on, you know, kind of being ahead of the game and having the highest returns every year. And then, and seeing, like, I've been to their office many times, and they have the intense culture, and having Ray Dalio kind of go back on some of the things he's said, some of his principles he's said in the past, because of this, was really quite fascinating. So it's really upended everyone. So also kind of the top players in this industry. But yeah, so it's really changing the game, but I think in a really interesting, creative way.
Wonderful, thank you. And for those specific examples as well with the types of data, I think it makes it real for all of us on the call. And it's a nice segue to my next question, which is, in addition to alternative data, unstructured data has had a rise as well. Not as significant adoption, but 17% of firms say they are using this type of data now, whereas in 2018, it was only 2%. And this is a reflection really of the power of AI, artificial intelligence, and machine learning models, that being fed with this unstructured data can uncover new signals, provide new insights, and that competitive edge that you spoke of. So would be interested to know, Haley, as a data scientist, and you've talked about it a bit, but maybe we can elaborate in this context. How do you approach structured versus unstructured data science in your workflow? So we talked earlier about, sort of the difference and the challenges between interpreting them. But when you think then of combining them together in a particular workflow, and this, outside of industry perspective, also welcome here, because sometimes it can allow us to think about things in new ways for our industry. But how do you bring them together, and with what approach, in order to accomplish what outcomes?
Yeah, so with the work I was doing or have done, it was kind of like a piecemeal approach with approaching, structured and unstructured data. I almost ended up preferring using unstructured data, because then I can define the schema myself, depending on like what information I want to gain from this data. And I, again, was using a lot of like social media data. I was doing a lot of natural language processing and text analysis. So I worked mostly with unstructured data. I was actually kind of surprised in the survey to see that it was only, what'd you say, 17% were using unstructured. I honestly thought it would be more, if 90 whatever percent are using alt data. So maybe this is to Tim's point earlier, where maybe only like 25% are doing it well, because to me there's a lot of alternative data that's unstructured. So it is a challenge, because you have to figure out, okay, how do I match up like this schema from maybe the Johns Hopkins data versus, okay, this social media sentiment data. So again, it really, this is kind of a vague answer, but it depended really on what I was trying to do and what type of models I was using. And then, I was experimenting with making, really like proprietary, indices. So really trying to combine this data into one or two numbers or scores or measures of, in my case, how positively a brand was viewed in, consumers' eyes. So, you could translate that to the financial industry for sure. But coming up with creative ways, doing a lot of reading on that, to actually, you could probably generate some IP off of that if you come up with creative enough ways to combine structured and unstructured data. But, without getting too technical, like, I think that's like where, having a really strong data engineering and data science team comes in, is really combining that workflow, so that, the business analysts or financial analysts, anyone can actually, gain insights from that. But it does take a lot of research and a lot of expertise, and a lot of knowledge of statistics to come up with meaningful insights. You can't just kind of throw it all together and throw it into a neural network and hope something, comes out of it that's insightful. You have to understand, what is this piece of data what do I hope this piece of data is going to tell me? What would this tell me if I combine it, with the COVID-19 hospitalization data? And so again, it's cool because you get to be really creative, and come up with ideally unique insights that maybe other firms aren't coming up with. But some people are saying, maybe data scientists will become obsolete in a few years with, no code tools. I would like disagree with the rise of alternative data. Like that's where that skill set is really like alternative data, and then unstructured alternative data specifically, like that's where that skill set's really going to come in handy. So, you know, for the financial analyst, like if you can use no code tools, or if you can use like basic, you know, if you have basic coding skills and analysis skills, then that's great, because then you can give the data science team time to focus on, okay, how do we make sense of this mess of unstructured alternative data? Which I think is the really interesting part of this problem right now.
Thank you for that. And I think something you hit on there is really interesting is we look at the transformation of the data scientists, but when we look at the other side of the house, it's analysts, financial focused individuals, maybe getting that skill with a little bit of Python or know the low code, no code that will differentiate their role within the organization and their future role on the team. Natalie, were you gonna add something there?
Yeah, I was noticing a question by Mike in the audience. He basically asked something along these lines, which was, do you foresee coding, AI, machine learning being part of the CFA charter? So we'll see. There's not a definitive answer. We find that we do research in the market with this. There are a lot of questions from people that ask, you know, do I need a CFA or do I need coding? They, you know, look at it, which would be more beneficial to me. That's not really a question for this audience per se, but as we see a rise in people who are, well, companies are requiring those coming in at early levels to know basic coding, to know some of these languages. I can't say for sure that's for the CFA side to decide, but we see that there's at least within financial services firms, interns that are coming in are those that have exposure to coding, know these languages more, seem to be more preferable. And I think I've heard of a couple of banks where you can't be at a large, you know, hedge fund or buy side or sell side unless you're coming in with that basic knowledge of coding, definitely from the asset management side.
Thank you, Natalie, for that context. It'll be interesting to see where things evolve, but knowing that today a data-driven strategy is core to most organizations, and I think we had 80% of respondents making significant investments into artificial intelligence and machine learning strategies. That gives you an indication of what the underpinnings of organizations, you know, what they will require. So before we go to the questions, I wanted to pass one more over to Tim on the topic of unstructured data and even sentiment analysis. And if you can share some of the use cases for unstructured data or natural language processing that you're encountering, that would be terrific.
Yeah, I came across one recently that I thought was intriguing because, you know, there's different, like quants will look at different factors, you know, or you know, maybe it's a value factor or it's growth or different, you know, aspects. And one sentiment provider that we were talking to was really trying to make sentiment, you know, almost an additional factor in the kind of investment process. And there were kind of a number of ways they were looking to do it. But what struck me as really interesting was, in some cases, they were looking at earnings calls and then, you know, looking at using natural language processing and a lot of, you know, kind of machine learning to figure out, okay, during the management discussion, was it positive, was it negative, and scoring it. And then even getting into the Q&A aspect, you know, and trying to derive signals from that. And I think that even goes back to something I mentioned at the beginning, which is, you know, like this year was an incredibly all over the place market. And, you know, at the beginning of the year, things weren't trading off fundamentals. So like if you were going to screen for something, you know, it may not matter what your PE ratio is. You know, if sentiment was really high, or, you know, or the work at home type of, or work from home environment was going on, and the stocks like Zoom and, you know, others, like it was just like, where did you trade? Like you don't really have machine learning models to go back and look at those things to train off of and look at patterns. So leveraging alternative data, I think was pretty, a great idea for people to do during that. I guess in terms of an example, here's one. I'll try to share my screen. What we do, at least with our Ensemble platform, is we want people to ask questions. So we want people to come in and say, are customers still shopping at Walmart? Or will Walmart meet expectations for the next quarter or this year? And then what we have is we have over 1,000 data sets in our catalog, but we have our data hunters go through and say, okay, let's think about this holistically. Here's a picture of Walmart. There's going to be, people are driving in. All right, let's make sure we have the satellite data. It's telling us, cars in the parking lot. Let's look at geolocation data, people walking in and out of the store. Let's also look at employment data. Let's see, are there job listings up on going up? Are they pulling them? Are they going down? And then when you get into the spending aspect, you start looking at credit card data, which obviously been anonymized. And I think that is interesting, but it's also, it's not as detailed, I think, as people think. You're not getting a Walmart credit card receipt. It's a little, it's definitely harder than that, but you can, also lay on point of sale data and see like down the transaction level. And I even think the email receipt data is probably the best, and the ability for getting detail into what people are buying and how much. And then you look to the kind of the last layer, which is, okay, as a brand, what is Walmart doing? What are they promoting? What items? Are people interested? Are they liking it? Are they not liking it? That's where the sentiment data and kind of the NLP and social media analysis can come in. Then you have consumer insights like we were just talking about with, what are people's intentions? Are they looking to buy PS5s? And that's going to be a massive driver. And then last is just advertising data. So is Walmart aggressively promoting things into the Christmas selling season? And then I think one cool thing we've seen this year is with data, this is also transformed. Like now so much of it is going online that you're going to be looking at different ways to capture what's being bought over the internet versus the old school channel checks and those ways. So back to kind of the whole theme of this, you really want all the tools you possibly can, and that's having the CFA, that's having coding experience, that's like, if you can put that together, like that's unique right now. Like, I mean, we always talk about it, like analysts talking to data scientists, to data engineers, like, I mean, sometimes it's like, does not compute, like, and they're like, okay, we can't use credit card receipt data to trade oil because it's highly correlated. Like you have to think about it and step back and be like, okay, does this make sense? People walking into Walmart buying something shouldn't, I mean, maybe there's a correlation to oil. It's probably not something you're going to trade off of because you don't know how long that's going to last. So bringing all of those tools together, I think is thing, for the audience sake, something you should definitely think about, combining.
Thank you so much, Tim. And walking through that example really puts it into context. And I think that is the key there, is having the business context around the capabilities, but then also having the data science to be able to uncover any correlations for types of things that the business-minded individual may not be aware of. So we've got a few minutes left, and that's a nice segue to our questions. So I don't think we've answered whether AI and ML skills will be part of the CFA charter, but I think we've talked to some observations and really interesting thoughts around that. So I'll scroll to the top here. There are two relatively in the same camp, which is reference to no-code, low-code tools, and also a question around additional tools and resources for non-data scientists. So maybe, Haley, I'll pass this one to you to start. Can you point them in a direction of a couple of tools without asking you to endorse them, but something out there and some resources that might help them start to develop these skills And I was thinking it's kind of like the talent alpha, finding that which is going to provide that advantage. And so this is kind of ironically, maybe in that regard, the talent alpha versus generating alpha in analytics. So I'll pass it over to you for some guidance there.
Yeah, totally. So Apple and Google both have some. So Apple's, I believe, is called Create ML, which you can use for it's like image classification, object detection, text classification, and a bunch of other things. So there's that. And then Google also has one, I think it's just Google Auto ML or Google ML that you can use as well. So those are pretty easy because there's a lot of documentation around those. So I would suggest starting there. And then if you want more specific tools to do, so I mentioned earlier Quid, which they do a lot of just text classification and clustering. And topic modeling, which is really interesting. So there's so Google and Apple's are kind of broad. You can do a bunch of things with, and then you can kind of search more specifically. Okay, if I just want to do like really good text classification, maybe use Quid or something else like that. But I would start there. I think Google has another one too. But I am not, I like a more beginner one. I'm not quite remembering what it's called, but those, Apple and Google are good places to start. Yeah.
Thanks. Sorry, not to cut you off, Haley, but I'm hoping we can get to one or two more questions in our remaining minutes here. So thank you for that. If you think of the other name, maybe we can pop it in the chat. Over to you, Tim, with the question of, with AI and ML being increasingly used, how do you balance the alpha generated with the additional costs incurred? So how do you put a business case together to justify, significant investments in AI and ML?
We've seen funds do it in a couple different ways. There's this, like we go back to the sophisticated ones where they're actually ascribing percentages to each of the data sets that may go in. So look, price and volume might be 25% of every model that they build, but then they add in, a geolocation component at 25, sentiment at 25, and something else. And they're actually running that model to see, what type of alpha generation they're getting. And then they're trying to ascribe different values based on that. It's fairly interesting and fluid. We talked to other, billion-plus hedge funds that will say, like, we'll ask, do you have a data budget? Yes. What is it? Doesn't matter. Show me something that makes me money and I'll get budget for it. So it's a little bit more, I'd say, obscure on that side, but I think one of the benefits of financial services and the hedge fund space is if you can show someone how to generate alpha, or that data set has alpha, they'll find a way to come up with the money. And I'd say most, like the data sets that we deal with, are probably 30 grand on the low end, 120,000 per year on average, and there's some that are millions that are very raw and very big, but have a lot of value and people come back for them. So kind of hope that touched on some of that.
Excellent. I see William. So I think we might be getting the hook here. So we have two remaining questions. We will follow up with those offline. So before I pass it back to William, I'd just like to say thank you very much to CFA Vancouver for having us all today. I'd like to thank my colleague Natalie for kicking us off, and Haley and Tim, thank you so much for really interesting perspectives, some helpful guidance, some great examples to put data science in context for our audience today. So thank you very much. William, CFA Vancouver, thank you for having us, and back to you.
Thank you, Tiffany, and thank you to our panelists, Natalie, Haley, and Tim. Great insights, and it's nice to have a long suite of data scientists and experts that are helping us understand the topic. Thank you, Tiffany, and I'd like to also acknowledge our sponsor, Refinitiv, for supporting CFA programming. And with that, look forward to seeing you and everybody in the future events. Thank you.
Thank you.
Thank you. Bye.
Thank you.